Good evening, everybody, and welcome. Today is the second annual ICCC Real Estate Roundtable. This is something that we started last year, and little did we know that this is going to become an annual affair. And I think as the years go by, this is going to be something that people will want to attend, and something, an event that people are going to look out for in their calendar every year. Today, we will be analyzing and understanding the post-COVID-19 market trends in real estate. And it's not just post-COVID, because I think we're also interested in knowing how the COVID market is going. We have with us a really esteemed panel. We have Lisa Patel, the president of the Toronto Regional Real Estate Board. We have Reetu Gupta, president and CEO of the Gupta Group. We have Raman, the group CEO of SaveMax. And we have Stefan, executive managing director, GTA for Cushman and Wakefield. So if any of you have joined us on Zoom or you have joined us on Facebook Live, please send us your questions. I'm sure the people on this panel have all the answers. So anything that you might think about real estate, commercial real estate, residential real estate in all over Canada, real estate in GTA, we have the people for you. My name is Vijay Thomas. I'm the president of Indo-Canada Chamber of Commerce, and it is my pleasure to be the moderator and the host today. So what are we going to be talking about today? We're going to talk about real estate across Canada. I was just talking with the panelists. Raman was one of our panelists last year, and he had the courage to say that the real estate market was going up. And that was right at the beginning of the pandemic. And I was on this side, and I was like, what is he talking about? Is this even possible? And he has been proven right. Canadian real estate, GTA real estate is proven. There's no gravity in the International Space Station, and there's no gravity in the Toronto real estate. So these are two places that seems to be no gravity, but we'll need to look at this and know more very soon. So what's the scenario like to be, post COVID-19? Also, we would like to talk about, how, interest rates could play out. What are the other aspects that are, defining the market? So all of that's coming in. If you know anybody else interested, do let them know. Join us on Facebook Live and on Zoom. Moving on. We also wanted to just have a small thing about the ICCC Small Business Assist Program. This is a program that we started where if you're a small business owner and you wanted some help during COVID-19, you wanted to know something about technology, about government programs, about accounting, finance, you sent us an email to iccc@icconline.org. We will connect you with one of our members, an expert in this area, and you can get a free counseling session. So something that you can approach, and please take us up on that. Moving on, we have a little disclaimer. The information provided at the webinars is for general information purposes only, does not constitute legal or professional advice. So if any of you listened to this and went bought a house, you know what, and it went up or down, we're not going to claim part of the upside, and you cannot claim any of the downside from us. So this is why this is in here. The views expressed by the speakers are their own personal opinion, do not necessarily reflect the official policy or position of the ICCC. So moving on, we have a few presentations. We will start off with Lisa first, and then after which we will have a Q&A. So have your questions ready. So we have a first speaker who's going to be Lisa. We'll have a little bit of introduction about Lisa. Lisa is an award-winning real estate professional, entrepreneur, and social activist. She founded the Lisa Patel team, which focuses on all aspects of real estate across GTA for over 11 years. She's a successful brand, has been included by McGraw-Hill in an educational textbook and studied by students in business professionals, and entrepreneurs. In 2009, Ryerson University recognized Lisa as the top 30 under 30, and named by Ryerson as the art of diversification. Now, with that, welcome, Lisa. If you have anything to add to your illustrious bio there, please go ahead, and we'd like to hear your views on real estate in Canada and in Toronto in general.
Thank you so much, Vijay. And let me just start off by saying to the panelists and to all of you listening, it's an honor and pleasure to join you this evening. And Vijay's also given me a warning that I must keep it short. So I'm going to do my best to get through a lot of material here. So thank you once again for having me this evening. And to start off things, I would like to talk about a little bit about Treb's market year in review and outlook report that we have put out for 2021. So this report, if you've never had the opportunity to look at it, it's definitely worth taking a look at the digital digest. It was incredibly done, and I thank our Treb staff for what they've done. When and it outlines what's driving the demand and supply of home ownership in the GTA now and beyond the pandemic. The report was also uncovered to the sharp halt in market activity and the onset of COVID-19 pandemic, followed by the strong rebound that also continues to be a topic of with record sales each month. And that's one of the things that we should also recognize and highlight is as we walked into 2020, we walked in knowing that we already saw demand starting. And of course, we went into a complete halt as we hit March of 2020. And shortly after, as the economy started to open up, we witnessed record-breaking months to follow with it. So since real estate was deemed essential by the province, realtors began utilizing virtual tools and spacing out showings to ensure safety came first, but also allowing clients to have the opportunity to buy and sell. So to all of you out there that are Treb member realtors, thank you for everything that you're doing. But let's also look back at market for 2021. So if we move to the next slide, which I think you already did, despite COVID-19, our research conducted by Ipsos shows strong buying intentions will continue for the remainder of the year. We discovered that more buyers are looking to purchase homes outside of Toronto and the core. There's also a preference of detached, semi, and townhomes. So those three segments we've seen as the heightened demand. And we've noticed that 81% of those that were surveyed said that they would use a realtor in 2021, which is up from 2020. If we move to the next slide, we know that numerous of homes are available. We know that the GTA homes are expected to jump over to 100,000 mark this year. And you can expect strong competition between buyers in many parts of the region, pushing up the average selling price beyond the $1 million mark for the first time. And what we've already witnessed as we've walked into 2021 is that strong demand for buying intentions. And as real estate professionals, we know that mortgages go hand in hand with buying a home. So it has made sense that Treb to explore what's happening in the mortgage industry and where it's headed. So the Bank of Canada and lenders responded to the pandemic almost immediately with historically low mortgage rates. And as a result of low borrowing cost, that also sparked a lineup of eager buyers hoping to purchase a home. But this also points to how it all impacts the market activity in the remainder of the year. Mortgage Professionals Canada has indicated and let us know that interest rates will remain low. And if we move to the next slide, and it will certainly help support supporting households' confidence in their ability to buy and pay for homes over the long term. And it's clear that low mortgage rates are one of the driving factors contributing to the ongoing housing demand. The rollout of the vaccine is underway, and we're expecting that a clearer picture of the next phase of vaccination in the coming days. There will also be a time when the economy will reopen and we'll see the GTA population start to grow as immigration picks up based on increased federal targets. This will support the demand for ownership as well as renting over the long term. But let's not forget that housing supply will continue to remain an issue unless we see a greater diversity of all home types. coming online. We've also called on policymakers to increase the mid-density housing types. In other words, we call it the missing middle. There is a wealth of research on the missing middle in Treb's Market Year in Review and Outlook report. And I invite you all to visit treb.ca, that's TRREB.ca, for insights on the market outlook, housing supply, and even more of what buyers and sellers are saying. Thank you for the opportunity to share some insights with you. But if we look at it, and just a synopsis of everything that I've stated, so if we look at it, demand and home ownership is been evident that it's clear, and it's not just here in Ontario and Canada, but even in North America, that the demand is there. So what's contributing to this is factors of recognition. What the pandemic has really done is opened up what is value for us, what is important to us, from lifestyle to ultimately low borrowing cost, and already going in with a demand prior to the pandemic. And I'd like to thank you, Vijay, for the time today.
Thank you, Lisa. And I think, this is the Indo-Canada Chamber of Commerce. So I think there's also a whole cultural aspect to buying, I think, which you did not touch upon. But I think as Indo-Canadians, I think we also love to buy homes. It's one of those, asset classes that we love more than others. So I think that is something that also would be something. And I'm sure there's going to be questions around that, especially around investment. Where as the Indo-Canada Chamber of Commerce, we've been trying to get people to diversify outside of real estate, but they seem to love real estate much more. So we'll talk about that and more as we go along. So moving on, our next speaker is Reetu Gupta from the Gupta Group, born into a business family. Reetu rose to the top echelons of the Eastern Group by sheer dint of hard work over the last 2 decades. She worked as a receptionist and accountant at the front desk and sales. Reetu, I have a 18-year-old daughter. I've been trying to sell her the same concept to come and work for my company. She doesn't seem to buy it, but I will ask your dad one day how he figured this out. But so after that, after her 2008 MBA, she added hotels to the group's portfolio and launched the Gupta Group by diversifying into residential real estate. In 2017, Reetu and her brother Suraj founded and launched Rogue Insight Capital, a venture capital firm. A recipient of many accolades, Reetu was the 2018 ICCC Women Entrepreneur in 2018. So definitely very accomplished. And Reetu, we're very, it's a privilege to have you with us. So thank you very much. And if I've missed something, please, if you can add to your bio yourself.
Not at all, Vijayji. Thank you so much for having me, and thank you to the Chamber for putting on such an important event. I think that exactly, Vijayji, you had said that Indians and Indo-Canadians, we really have a passion for real estate. So I'm so happy to be here. And for your daughter, tell her to talk to me. I will exactly tell her and guide her to the path of family business, because there's parents can say some things, but kids can look at it a different way. So just send her my way at any time. So today I thought we'll talk about hotels, because we have a lot of amazing people here today on our panel. And I know that hotels is also a point of interest, especially for me being a hotelier. I thought I would paint a little bit of a picture for all of you here with us today. So here's a beautiful, pretty picture. 2019, pre-COVID, we could love each other, we could hug each other, business was great, you could get on a plane, there was no worries. 2019 in Canada, we saw an annual occupancy of 65%. So this is what we looked at by the year end, and an ADR of 163. So as you can see, these numbers are quite healthy. When you look at the number for Toronto, that's Toronto, which is GTA. So that's all of the suburbs in this number. So 24.5% at 183 ADR. So I'm going to tell you what was forecasted pre-COVID. It was forecasted that 2020 would end at a 65% occupancy for all of Canada with a 167 ADR. So now as we go to the next slide, you'll see what actually happened in 2020. Unfortunately, we were hit by COVID. This did not go well for hoteliers, as all of you know. With the borders closed, especially, this really hit us hard. So for us and for my company, we started seeing this sort of downshift and this downfall from March of last year. We ended off Canada as a whole, 33% at 129. This is actually quite high. So to paint a little bit of a better picture for you, as you can see here, as well, Toronto was at 30%-ish with an ADR 136. Now this number is actually very, very skewed. If you looked at the number of hotels in Toronto itself, it would be about 20%. And the reason that this is about 75% of Toronto, so not Toronto proper, but Toronto GTA, 75% of hotels closed its doors, and they were not profitable enough to be open. So they were not reporting numbers, which is why this number is actually much higher than it was. In addition, a lot of hotels that were reporting were sitting at 80, 90% occupancy, but they were actually filled with healthcare workers, but because hoteliers decided, you know what, let's throw our hat in the ring. Let's decide to help the people that need the most. And they took care of all the healthcare workers. So if they didn't want to go home, if they wanted to be in isolation, they would stay at hotels. So this is why this number is actually a little bit higher than the numbers itself, because it was skewed. So if we go over now to the next slide for 2021, this is what is right now forecasted for all of Canada, which is interesting. It's honestly, I love the disclaimer at the beginning because we don't know where this is going to go. For me personally, I'm very optimistic that as Ontario and Canada is rolling out these vaccines, we'll start to see the percentages go higher. Being a hotelier, I'm obviously very biased as well. So I really do feel that as soon as, the borders open, because our business is very much dependent on that US border opening. I actually had a chat with someone from CBC News, and they were not aware. They felt that whenever we came out of lockdown, so I'm in Toronto proper, we unfortunately were still in lockdown. And over the summer, I think we had about a week and a half out of lockdown. And a lot of people think that when you're out of lockdown, hotel business must have skyrocketed. But unfortunately, hotels, we were immune to the lockdown. And because the borders were closed and because there's a stay-at-home order, hotels just did not see that increase in occupancy, which was really sad. However, I do think things are looking up. I think as we're starting to see the vaccines roll out, we are starting to see travel pick up. Naturally, we also have a lot of people that are coming back into Canada, and as I'm sure you're all aware, the government quarantine program, which I won't get into, but if any of you have questions, please feel free to ask. And just moving on to the last slide here, speaking about investments in total. So in 2019, we saw a lot of investment into hotels. 2020, obviously, there was a little bit of a downfall. In 2021, we're seeing it go up as well. Something that's really interesting is in the Q4 of 2020, we actually saw the highest investment into real estate, which I know if some of you had joined late, Mr. Vijay was talking about Raman, who you'll hear about next, and that he had said, despite COVID, that real estate was actually going to make a killing, which it did. And it's really interesting that I feel that people, because they couldn't invest in travel, because they couldn't invest in other ways, they decided to turn their attention to real estate, which is really, really, really great. Another interesting anecdote is the governmental debt right now for all of Canada is at 124% of GDP. At the end of World War II, it was also at about 123.9. So it's very interesting to look at our economy, and a lot of people are making that comparison, to post-war and looking at where we're going to go. It is very interesting. However, all of the great economists of Canada are saying that our country, in comparison to the G7, we're going to actually grow the quickest, which is really great to see. The employment rate is actually, we're already ahead of all the G7 countries, which is really fantastic. Similar also to what Lisa touched upon, multifamily real estate has really jumped up. And in the last quarter of last year, you could see investments, you could see people's preferences were shifting. And a lot of that had shifted over to multifamily real estate. Unfortunately, the interest to invest in hotels has dropped, but that's better for me because that's more hotels for me to acquire. So this has been great. Another anecdote is in terms of office, I'm sure all of us had to work from home for the past year. What we're looking at now as things are starting to open up is I don't think offices will go fully virtual. I think we're going to start to see a hybrid model. So larger companies are probably going to scale back and offer all of their staff and their teams the ability to be able to work from home and to work virtually. So I think we're stepping into a new world. It's really exciting. There's a lot of great opportunities. And yeah, I'm excited to see what's to come.
Thank you, Reetu. That was fantastic, and we've got, I think, questions already coming up. So we will hold on to the questions. I think there's a lot of questions coming up on Facebook as well as on Zoom. So let them keep coming in. We will ask them to the question to the panelists. Now, next speaker is Raman. I already kind of gave him a compliment because last year he was here and he was very brave, and he said this was just beginning. Nobody knew what was happening. I think we've got a little more insight into COVID and its workings right now, but that was, I think, April of last year, and he was crystal clear in terms of what he was looking at it. So he is the CEO founder of the SaveMax, which is an iconic brand in the real estate industry. He has an MBA from Maharishi Dayanand University. He landed with his MBA degree in Canada with a vision in his eye to build a new home. He discovered his path, and then there was no turning back. While building a home for family, he envisioned to help others build theirs. He also, and I'll leave this to it, but the stadium in Brampton has the SaveMax name on it, and I think he can talk a little bit, or we can ask him some more questions about that. But he's also won the Philip Kotler Award, Pride of India Award, Top Choice Award 2020, and Brampton Guardian Best Real Estate Agent Award 2016 to 2019. So over to you, Raman ji, and we hope to hear something exciting and some words of wisdom. And everybody listening, he has been proven right last time, so listen carefully. Raman ji, over to you.
Thank you, Vijay, and thank you, Iccc, all the panelists, Don Patel, and our women empowerment, Reetu, as well as Lisa Patel. It gives me so much, kind of extra power when I see, these women. They are going at the forefront and making a difference in the community. And I think this is what an incredible approach, which our Indo-Canadian community is showing the path to the mainstream community. And I really feel proud on these, role models for the women entrepreneurs. So Reetu, Lisa, I would like to give my personal compliments to both of you for doing such an incredible job in the community and society. Vijay, of course, in 2020, April, I was actually talking on a couple of radio shows, and it was ICCC panel as well, where I was bold enough to predict that market is going to bounce back in June. And you know what? Many people called me, text messaged me, and I was trolled on social media for that maybe you doesn't know what exactly has been happening into the world. But I want to put up my logic in front of you, why I was thinking that. And you know what? It has proven right, because at that point of time, even CMHC was predicting that market is going to go down by 18%. But Vijay, real estate market is always predicted locally. You don't go and predict the market for the whole world. Now we have to try to understand what is the reason, what was my logic to give that prediction. The first simple logic, that GTA market is dominated by South Asian community, as well as a lot of Chinese community. And we are a community where problems like COVID-19, we are a little bit careless onto that approach. So it was very easy for people to come out of the situation, because we face these kind of problems back home many times, so we may have a little bit better experience and better resistance to these problems. The second simple logic was, at that point of time, if you look at the statistics in April, and I'm pretty sure Lisa can definitely second that, there was not much inventory into the market. We were just sitting on an inventory which was 1.5 months. And it's a very simple common sense. If pandemic is there, if a problem like COVID-19 is there, people are not going to put their properties onto the market, which is going to bring the inventory levels down. And it's a simple statistic, simple logic, demand and supply. If there's not much inventory, it is definitely going to increase the prices into the market. And it is definitely going to attract more buyers. And the third and simple logic for that was our previous history. In 2008, 2009, when there was a world-class recession, Canadian government has proved time and again that they are going to bring the rate of interest down, which is definitely going to add more fuel to the fire and attract more buyers. And this is exactly what happened. First of all, because of the dynamic, the demographics of the GTA market, I was very confident that people are not going to stay for a long time to buy the house. And this is what exactly happened. Second thing, the inventory keep going down. And even today, if I see the inventory is not even for 30 days, am I right, Lisa, for that? And the rate of interest has come down to 1.5 to 2%. So definitely these are the factors which really helped the market to bounce back, and exactly in the June market bounced back. And at that time I was getting a compliment from every single person, whereas I just applied my simple logic to that. And the second thing, which you talked about, SaveMax Sports Center, This is one of the most iconic building in Brampton, which was named as Brampton Soccer Center. So we took the courage to go and talk to the city and get the naming rights for Brampton Soccer Center, which will be named as SaveMax Sports Center for next 15 years. Now, Vijay, the simple vision behind that was I wanted to give a hope, a dream to a new immigrant that we can be successful in this country. And I think that was a very strong message to the mainstream community that we are here to contribute to the economy, to the society, and to create a better community through our business efforts, through whatever the best we can do. And Vijay, I would also like to add another initiative which has been taken by Team SaveMax. We have pledged $2.5 million to Trillium Health Partner for the construction of the new hospital in Mississauga. And for the next 10 years, any kid who is born under Trillium Health Partner will receive the first gift basket from SaveMax. So this is going to be a matter of pride for all the South Asian, for all the immigrants, when we go and show to the mainstream community that, yes, we are here to make a difference. So thank you very much for all the support, to all the viewers, to all Iccc panel, as well as board of directors, for all the encouragement. And a special thanks to our young heroes like Reetu and Lisa, who are giving us encouragement and support and giving us a message to go forward. So thank you very much for that. So Vijay, this slide, you can see this was our life before COVID-19. A lot of beaches, a lot of parties, a lot of marriage functions and all that stuff. And we were so happy at that time. So we go to the next slide and we see what was happening in the real estate market in 2019. Go back to the previous slide. So Lisa has shared some stats, but I have gone a little bit details onto that. In 2019, this is the Toronto Real Estate Board. Out of the total sales, 46% of the sales were happening for the detached houses, where the price has gone up by 0.9% as compared to last year. And the second best was condo, apartment, and then townhouses, and then semi-detached. So this was the configuration of the sales as well as the prices, which you can see on an average, it has gone up by 3 to 4% as compared to 2018. Now came the time, next slide, please, when we all got stuck up in a life during pandemic. And you can see what happened. We all get stuck up into the houses, and there was not too much functions, parties, and all that stuff. And people were thinking life is gonna come to a standstill. But real estate market has proven, real estate industry itself has proven that it is a COVID supportive business. So if any challenge like COVID comes, the market is going to perform better. So let's look at the stats. What happened? These are the stats from CREA on the left-hand side. 2021, the total number of sales happened close to 551,000, which was up by 12.6%. Now, this is the beauty here, Vijay. We always talk about the market in Toronto, in GTA, but look at what happened to the market all across the country. We were up by 12.6% on the sales, and we were up by 17.1% on the average price on CREA. If I look at the stats on Toronto Real Estate Board, the sales were 95,151. It was up 8.4%, and average price was up close to 13.5%. And this was my prediction in April. I predicted at that time, the price is gonna be up more than 10% on Toronto Real Estate Board. And you can very well see, it has gone up by 13.5%. So that clearly tells the true picture during pandemic, what exactly happened to the real estate market. Next slide, please. Now, why it happened? That is the question everybody's asking. Of course, there were certain factors, as Lisa mentioned some of them as well. Low rate of interest was one of the major factors. Low inventory levels, demographics of the areas, especially if you look at the market in Toronto, if you look at the market in Vancouver, if you look at the market even in Alberta, a couple of markets has performed well in spite of pandemic. So demographics has played a very important role over there. Now, very big reason, which I personally see, a big financial support from the government, which helped a lot many people to sustain in the market and actually raise the bar of the consumer confidence. And I think that was one of the most important factor. Even like look at the businesses, how and what kind of support they got. Either it was provincial government or it was federal government. And I think as a citizen, it becomes my duty to compliment them for the fantastic job which they have done during pandemic. So some of the markets which actually have shown double-digit and more growth: Halifax, Montreal, Hamilton, Toronto, Victoria, Vancouver, Winnipeg, Quebec, and Edmonton. So these are the markets which are very strong markets, and I deliberately put Edmonton and Quebec over there because these were the markets which were considered as a slow markets, but even during pandemic, they have performed fantastically. Next slide, please. Now comes what is going to happen in 2021, because that is a question which many people are asking. So now there are certain factors which is going to make a lot of impact in 2021. Of course, low interest rate is going to play a very key role into the real estate market. How the economy performs, other markets, other areas than real estate, how the job market is going to perform. Because I think, Vijay, this is going to be the most important thing for us to watch. How job market react after the situation gets to normal. When government will stop sending the support to individuals as well as to the business owners. Government policies and subsidies are going to play an important role as far as the small businesses are concerned. And of course, at this point of time, you know, the biggest factor, which is COVID-19 vaccine. What is going to happen to that? How much supply we are going to get? Because that will help a lot as far as the opening up of the market is concerned. And of course, we all are praying and predicting that we will have lots of vaccine so that we can come out of this situation. Now, I have certain predictions. These are the general prediction for 2021, and we have actually published a full report onto that. So GTA market, as compared to 95,000, we are expecting to have 105,000 sales in 2021, which will be like close to 9 to 10% up as far as the sale is concerned. But I'm a little skeptical on average price. Lisa, I know you predicted that the average price is going to be above $1 million, but I think I am sticking on to 984,900. I put some of my logics behind that. And Vijay, in coming months, after March or April, I see market is going to streamline. See, right now market is really super crazy. But because now the inventory level is rising, and we were in a very hot market for last 6 months. And of course, like, you know, now I can see from the ground zero that market is streamlining. Those craziness is getting over now. And if I see the Canadian market in general, the estimated sales price is approximately going to be 594,000, which is again a good jump as compared to 2020. And the average, estimated sales is going to be 594, and average price is going to be 645,000. Before I end my discussion, this is a strong message for people outside over there. If somebody is expecting the market to go down, steep down, please guys, come out of that phobia. It is not going to happen because we are in one of the strongest economy. There's a lot of pressure from all across the world on Canadian real estate market. And there are many people who are actually looking towards Canadian market to do a lot of investments. So market is going to stay strong. Of course, seasonal adjustments are going to be there in the market. So Vijay, thank you very much for giving me an opportunity, and thank you all.
Yeah, thank you, Ramanji. We will come back to you. I think very precise predictions for 2021. Hope you guys have the numbers there, which brings us to the next presenter, next panelist, Stefan Teague. Stefan is from Cushman, Wakefield. He's got 15 years of brokerage experience and started his career as office leasing broker before rising to be the executive managing director, GTA, for Cushman, Wakefield. So he is a recognized industry leader and brings the commercial real estate. So Reetu talked about hotels. Lisa talked about the Toronto market. Ramanji talked about the overall market and his predictions. And Stefan, we're looking to hear specifics about the commercial real estate and the Indo-Canadian community. A lot of our members have a lot of investments, including, I must confess, myself in commercial real estate. So we will be listening very intently. So over to you, Stefan. And if you want to add something to your bio, please go ahead.
That's great. Thanks, Vijay. Well, thanks for having me. I really appreciate being here. Commercial real estate, that's a big topic. Lots of asset classes, lots of things to discuss there. I thought in the time that I have, I'd just talk about two of them, which seem to be getting a lot of interest, specifically the office category as well as the industrial category. So why don't we go there with the slides? I'm going to open up and we're going to look at, putting perspective on change in a COVID-19 world for those two particular asset classes. So let's talk about office. And I think Reetu talked a little bit about this. Certainly we're all working from home, and currently if you were to go downtown Toronto, and actually in any North American market right now in the office category, most buildings would be at max 10% occupied. I think a Dallas, Fort Worth kind of market is essentially, reporting with 30% occupancy, just people in the buildings, but for the most part, the office space is not being used. Okay, there's no question about it. And a lot of questions around what is the long-term impact on work from home in the net fundamentals of demand for office space. So let's kind of put Canadian markets in context. If we go to the next slide, this was the, despite the sublease spike, this is a real message because sublease space is spiking vacancy-wise. Canadian office markets are mostly remaining strong. So if you go to the next slide and take a look here, look at the launching point. This was actually late 20, it says Q1 2020, but this is actually Q4 2020. So in North America context, Canadian markets were extremely strong. In fact, in two conditions, Toronto and Vancouver, we were leading the market in low vacancy. I mean, this is exceptionally low vacancy in a North American scale. You can see over on the far right, Calgary and Houston, very vulnerable to oil and gas economies. But for more diversified economies, particularly driven by tech, Toronto, Vancouver, it was the lowest vacancy, okay, in North America. I mean, just an incredible, outperforming vacancy in places like San Francisco and huge tech hubs like that. So the launching off point, the office market's an incredibly strong market at that time. In fact, it was really difficult to find space, and many occupants basically were looking at taking more space than they thought they initially needed just to hedge against growth. And so why was it so strong? It's the talent, okay? Occupiers are chasing talent. So if you believe Canada will continue to attract talent from immigration, will develop talent here, tech talent specifically, talent for health sciences and future growth industries like that, hyper growth industries, the demand will be there. So this is what was happening. Certainly what happened was then we saw a sublease spike. We hit the pandemic. Next slide, please. And there's this flood of sublease space on the market. And this was primarily a downtown story, but it affected the suburban markets as well. I'm showing here Toronto in context, but it was incredible spike. We saw this probably around May, June start to really gain momentum. As a broker record, I was signing multiple sublease agreements. So these are tenants that lease space, they're committed to it. So unlike hotels where they're paying if they're using it, they're still paying whether they're using it or not. They're committed to this space. They're thinking, we don't really need this. Let's throw it on the market because maybe we can get some recovery. Someone else will lease it, sublease it from us, and away we go. So this is what's flooded the market with vacancy. And as a result, it's really spiked. It's this sublease, primarily a downtown situation. Suburbans were a little more resilient to that. But you can see here the spikes, and if you follow this through the time, the big mountain on the left is the spike from the dot-com bubble. There you can see in 08, 09, 010, this was the spike of sublease space from the financial crisis, and eventually came down. And now we're seeing this spike from the pandemic. So this is kind of predictable behavior. Tenants will throw sublease space on the market. So the vacancy is rising. In fact, if you look at that stat, sublease accounted for almost 50% of all available space downtown. So what does that mean? Well, that's space that is fully leased, mostly being paid for, but is available and is in the vacancy. So from a landlord perspective, they've been okay. They're still collecting 95% rents for the most part. And so our landlords and office spaces performed very, very well in general. And maybe one of the stories is through this whole pandemic is how resilient an office class is through time, especially if you have quality tenants, right? For sure. So the covenant of the tenant is becoming absolutely critical. So this vacancy is rising, and I think you'll continue to see the vacancy in office spike. It'll continue to go up through 2021. And it'll create some doubts about, oh man, no one's going to occupy office space in the future. But the reality is what we're seeing on the ground is we're seeing some recovery. We're starting to see tenants say, hey, I'm starting to reimagine the purpose of the space. Maybe it's not for doing heads down work anymore. I'll do that a little bit more from home. But I like this opportunity of a total workplace ecosystem. My employees are asking for agency. Where can I work? From home, maybe a suburban flex pad, maybe it's a downtown headquarters one day a week. Give me the options, the agency to work in this environment. And so many companies are going through saying, what type of work should be done at home? What type of work should be done in the office? How do we get back to the office to continue to create culture, to foster culture of our company, to innovate, to create? So they're not abandoning the notion of office space. They're just thinking about it differently. And so what that might mean is while companies may not need as much space because of work from home expanding, they still may need about the same amount of space because they got to spread out a little bit more for safety and health protocols, right? And as the economy grows and the demand grows, those are going to be office jobs. And millennials, we know from our studies, want to be in the space, and they're forming a huge part of the workforce. So we're probably expecting a net growth. In fact, in Canada, we're expecting more than 50 million square feet of new office space will be required in the next 10, 12 years. Okay, so the long-term prognosis for office is very strong. If you do look at right now, this is the vacancy today. It's 5.9%. That's what it's got to. It's still the lowest in North America. So an incredibly low vacancy nonetheless, despite all this spike. And this is across all the markets. Certainly there's going to be challenges in Calgary, no question, places like Houston, which have a huge amount of supply. But markets where you think are going to have growth economies, Toronto, Vancouver, are going to see this. And here's the final thing I'd just like to share. If you do look at the diversification of ownership in office, just remember this. Next slide, please. The vast majority of office space, this is Toronto, but you can apply this across Canada, it's institutionally owned. I mean, here's 7 global powerhouse landlords. They own 40% of the office product. Okay, they're stable, they're well capitalized, they're sophisticated asset managers, sophisticated operators. They create, they innovate. They're going to figure this out, and they're going to get people feeling very comfortable to get back in these environments and continue to drive their business. They're not going to be pressured to sell. They're going to hold on to the best assets. I think quality office space will continue to perform very well in the right locations, the right space. The biggest concern in the office market will be those non-quality assets. We call those C-class assets. Can any amount of capital go into them to create health and safety protocols that attract the best talent into them? Or do they just become something else? That would be the real concern. Do they become declining investment assets going forward? We'll just have to wait and see. Let's go into industrial. Oh, everybody's favorite asset class. Everybody just loves industrial. And is it shockproof? And why not? Just an incredible story. Just to put in perspective, Toronto is the 3rd largest industrial market in North America at about 800 million square feet of space. Dallas is quickly catching up there. But look at this, very similar. The lowest vacancy in North America, Vancouver and Toronto, again, 2 Canadian cities leading the way. The demand has just been incredibly strong, and the response to build industrial product is kind of difficult here, right? We have regulations about where you can build, what you can build, unleashing that land. And so even though the demand has been very strong, it's been very difficult to get that product off the ground and developed. Even Montreal performing incredibly well industrial. And this is really what the pandemic done, is it just put in a catalyst in the explosion of e-commerce, the transformation of a digital economy, retailers quickly deploying into warehouse space. And so the demand for logistics, supply chain solution has grown. And you've seen this as you drive around the Greater Toronto area, the incredible corporate industrial parks that have taken place. And this is what's happened. And you can see, here's the absorption, the pure demand of industrial space, between, I think this is pre-2015, about 2.8 million square feet in Toronto a year. Now it's spiked up to 8.4 million square feet. Well, Amazon's a huge part of this, the Amazon effect, taking a 1 million square foot warehouse and whatnot across many of these markets. So the demand has been very consistent. You've seen the absorption, and we predict this is going to continue. It's extremely strong right now. The big story here is, let's go to this next slide. Look at the rent. This is why investors love it. Toronto has seen a massive rent pressure. The elasticity of the rents have grown. So, for industrial occupiers, they may be coming off leases where they're paying $5 net and being told, oh, by the way, it's now $10.50. It has literally been that kind of explosive rent growth based on demand. In fact, in Q1 2021, we'll see the first time average rents in Toronto eclipse the $10 mark. So just an incredible net story going forward. And here's the average rent dollars across the board. And you can see Vancouver leading the way when we put this into US dollars. So very strong returns. This is why most investors can't get enough of industrial real estate. Very challenging to find the right real estate. And we predict this is going to continue to go forward for the coming years. So that's a quick update on the industrial market. So over to you, Vijay.
Thank you very much, Stefan. And I think that's fantastic. I mean, there's I think we've got a whole perspective from Lisa about real estate in Toronto, Reetu about hotels, Stefan about commercial, office, and industrial, and Raman about the overall. So now we'll go to some questions. One specific question I think is about specifically, this is to both of you, Lisa and Raman, is about the kinds of real estate. I mean, so we see detached and semi-detached and townhomes, kind of being the flavor right now. Condos, not so much, but there's still new condos going up. So so is there going to be a glut? So, so Ramanji, is your view on condos the same? Like, do you think you've got a prediction? But is that specifically, if you were to break it between the asset classes, how would you do that? So we'll start with you, Ramanji. Ramanji, I think you're on mute.
Sorry, Vijay. So Vijay, let's first talk about the condo market. As per my understanding, condo market is very strong in the Toronto side area. Mm-hmm. And of course, we will see 6 to 8% growth in the condominium market. I know there's a lot of inventory sitting out there, but believe me, there's a lot of demand. And the moment we come out of this pandemic situation, it is going to be flooded with the renters over there. And you will see, I'm really very skeptical and worried that the condo market can spike the same way the low-rise market happened during pandemic. Because once the demand for the rentals is there, the demand for the investors is there. Mm-hmm. Now, if I look at the townhouses, semi-detached and detached, of course, detached is always the most favorite product in Toronto area. But right now, because the detached houses has gone out of the range a little bit. Like if you look at Toronto, Brampton, Mississauga, you don't even get a decent detached house for $1 million. So I think there's going to be a lot of pressure on the semi-detached and the freehold townhouses. But of course, detached is not going to lose its love and affection towards people. It will still maintain that decent growth of 10 to 12% as far as the sales is concerned. So that is what my understanding.
Okay. So Ramanji, what about end user condo people? I mean, is this going to be just an investor fueled thing in condo? Is there going to be end users? Are you thinking end users are not going to get into condos?
So the beauty of the condo market is it is more of the investor centric market. And then, I would say, in my understanding, it's 60 to 70% of the investors who put the capital over there into the high-rise buildings. And that is why, because see, in Brampton, there's more than 100,000 people they are living in the rentals. In Mississauga, more than 100,000 people are living on the rent. In Toronto, 25 to 30% population is living on rent. On top of it, Vijay, there's something very funny. 250 to 300,000 immigrants land in GTA area every year against a population of 3 million, which increased the population by 8% without the production of a single child locally. Mm-hmm. Right? So that really boosts up and creates a lot of demand. There's still a lot of demand inside the market. All these people who are living on the rents, they have to come out and buy the properties. But condos is the most favorite for the investors.
Thank you, Ramanji. Lisa, if you want to add something to that.
Absolutely. So what we have to also look back at is Vijay brought up the point. Raman brought up the point. But here's a couple of things to think about. The market is in the condo market's already busy. We're already seeing multiple offers in the condo market. It has already come back. Many people that are already priced out of the detached, semi, and the townhouse segment. The condo market has become the alternative of choice. And ultimately, we already knew that once immigration would open up, I mean, here's the thing, the condo market on its own was already seeing sales. It wasn't that it wasn't seeing sales. Yes, price dipped. However, price is coming back and location is also coming back. That's going with the condo market. The other aspect you have to look at is the rental aspect. The rental aspect is the one that's been hit the heaviest. And we know that once immigration and once the economy starts moving again, that we will see a lot of the rental units already be maximized. And once that happens, and if we think about immigration, I know so many people keep talking about the 400,000 immigrants that are expected to come in the next couple of years, which is a question mark of already as to what will happen with our marketplace, with supply being so tight. But we also have to think some of them are going to purchase, some of them are also going to take up the rental market. So we're going to be seeing a really robust economy for the next couple of years, right? I mean, the area that we really need to focus on is what types of jobs are going to go with that economy.
Thank you, Lisa. So that's fantastic. So overall, I think I think that what everyone's saying is as we get immigration coming in, that's going to be a driver. Immigration is going to drive just about everything and
a little bit of everything. You've also got schools opening back up, everything opening itself. Once the universities get back, that will be a different story too. That will open another picture.
Yeah, I'd just like to make a comment on this. If you also look down, upstream a little bit, the developers are very bullish on Toronto. You know, they're buying choice opportunities around transit-oriented development. They're seeing through the pandemic, looking at high density, low density, mid-rise density. They certainly pivoted a little bit to look at the mid to low density opportunities for development out in the periphery markets when the pandemic first hit, you know, anticipating this thesis that people would want a little bit more space and move out. We certainly have friends and colleagues who have made some life decisions maybe to leave the city and do that. But long term, I think they're looking through the crisis and recognizing that people still want to be in vibrant cities. Condos, purpose-built rental opportunities, maybe some boutique things here and there. They feel very bullish on that. And again, these are projects that will be delivered in 2, 3, 4 years from now. So they're planning and making these investment decisions well in advance. And they're taking this opportunity maybe with fewer players in the market to buy the best properties. So we're seeing tons of demand on those choice assets.
And just to add to that, he's absolutely right, because even the new construction segments, if you look at all new constructions, the demand for those have blown up as well. So it's really interesting to see how it's all gonna play out, because every level from resale to new is actually busy right now.
I completely agree. Actually, we at the Gupta Group, we closed a condo last year in 2020. So we thought, you know, with COVID, we're going to, you know, we might see some of these closings fall through the cracks. We might not get people move in, but people were so excited to move in. Everything closed on time. It was really fantastic. And we still have a few of our high-rise condos downtown on the market. It is selling really, really well. And further to Stefan's point, we're absolutely still looking to build. We have land at Yonge and York Mills. We have land at Yonge and Steeles as well. And we're exactly, you said, the developers are bullish. We are absolutely that way. We're not looking to put the brakes on any projects because we can see that there is still going to be ample opportunity in the future.
Thank you, Reetu. I just remember from your slide, there was also a part where you said occupancy, and I noticed 2021, December, it goes up a little bit, but come December, it comes down. So is there a reason why occupancy is coming down in November, December? December?
Yes, absolutely. That's actually just the way the market is in Canada. So in November, December, especially in Toronto, we always see a little bit of a dip. That's where all the snowbirds tend to travel. They leave the cold country here. So we always see a little bit of a dip during the holidays, and then it jumps back up in spring.
I was going to ask, is that you're not predicting a third wave or something like
that?
No.
That is back to normal supply and demand.
Okay, fantastic. And so I think a big question to all of you, I think we'll go one by one, is I think everybody that's in the audience, right? I mean, is looking to say, should I invest, right? We're Indo-Canadians, we like to invest in real estate. So we'll start with you, Reetu. What should Canadians, like what kind of, you know, there's people who want to invest real estate. Somebody once told me, when is the best time to invest in real estate? And then it was one of those knock kind of jokes. The answer was yesterday, right? So let's assume if that was true. So when is the next best time to invest? His answer was today. So what do you think? And what asset classes? Is there any guardrails? Should people be careful? We'll start with you and we'll go around. But Reetu, your thoughts on, to the end user or to a small investor, you know, a member of the Indo-Canadian Chamber of Commerce, what would be your advice?
Absolutely. So you know what? I think obviously all of us here are very biased when it comes to real estate. So going back to your disclaimer in your second slide, we'll all give our advice, but none of us have a crystal ball. I would say absolutely real estate is a very safe investment because we know prices are going to go up. We are living in one of the most worldly cities in the world. Toronto is one of the most populated cities, one of the most popular cities. So any kind of purchase real estate, which is in the GTA, will absolutely do well. In terms of asset classes, I really think that depends on your level of knowledge as well. I wouldn't jump into an asset class that you are not educated about, because I find, you know, somebody will pick up the paper and read a trend and say, okay, you know, life sciences real estate is going up, I'm going to invest. But there's a lot you need to know about that sector. So I would say before you jump into it, make sure that you're knowledgeable, make sure that you've done your readings, make sure you talk to the right people in that industry, so that way you can make an educated investment. I find the people that don't find a return on the real estate is because they haven't done their research. So once you do your research, absolutely, real estate is, you have to have patience. It's not something, you know, like a startup where you can pull your money in and maybe a year later you can pull it out. You have to have patience with real estate, and then you absolutely will see returns.
Thank you, Reetu. Lisa, if we can hear some of your views for our viewers, what should they be doing? Should they be hold on to the cash? Should they invest, go out there? raise the prices again more? What are your thoughts?
Well, I was going to tell them to take the cash from under your bed and spend it first, right? No, I'm teasing. But you know what? Obviously, I'm going to say I've been in the real estate industry and the mortgage industry for the last 17 years. So I will say that real estate is a long-term investment. And anybody that is wondering what to do, there's so many benefits to real estate. And even though we've seen so many changes in the course of year after year, from government levels just to policy, but overall, I would say it's definitely, I would recommend to invest in real estate. And what type of investment is a whole other conversation. As Reetu mentioned, do your homework, due diligence is always needed, right? Ask the right questions, start asking those questions. What can I maximize on? And know that, it's not going to be an overnight process, but that it will take time. And what I will also say is if we look back at history and where we are today, and many people that have done very well is through the means of real estate. And so we, and speaking on behalf of Treb, I will say that it has been proven that, the dream of a home ownership is well alive. And we know that. And it's just, now it's understanding how to be part of that dream and how to create that dream. And I think that's where the questions need to start happening and visualizing what that looks like and how to make it happen by speaking to the right people.
Thank you, Lisa. Stefan, we'll come to you. And I think we probably have some wannabe investors in office. Some of us are already invested in office and industrial. You showed how industrial is really hot. Is it hot enough for people to still get in, or you wait for it to cool down? What are your thoughts?
Oh, well, I don't think it's going to cool down anytime soon. I think if you look at the big supply chain solutions companies, they have insatiable appetite going forward. So I think, what are the institutional investors doing? The real sophisticated commercial investors doing? They still have a very much a sheds and beds kind of strategy, if you will. They like multi-residential, they like industrial. There's lots of rent appreciation in those industrial. The challenge is finding it. That's the biggest challenge, and it's difficult to piecemeal put a portfolio together, and there's very few portfolios. So a lot of sophisticated money chasing those assets. So it's very difficult to get a hold on, but I like those a lot. I think you should also watch the institutional capital getting into some alternative asset classes. I think health science is becoming a bit of a frenzy, hot topic now. Everyone loves health science, lab space. Like this is the hottest new thing all of a sudden. I think you should also watch the Toronto market, particularly in Canadian markets with the dollar being down for the film and studio industry to really ramp up big time. So I think that's a big alternative asset class that people are excited about. No question. I like neighborhood retail too. Hey, let's face it, not all retail is bad. There's a bit of this Armageddon discussion, the death of the mall. Let's remember retail is sitting on land, and those malls can be monetized. In fact, in many ways, this pandemic has been a phenomenal catalyst to monetize that land for densification of residential and mixed use communities. And those landlords are going to do just fine. Thank you very much. And those retail neighborhoods, people like to shop locally. They're thinking locally. I don't know about you. I love going online and curbside pickup. I think that trend is going to continue. I think we've seen great leasing fundamentals and local well-positioned retail in those neighborhood communities. I think that's also good too. And if you don't like any of those asset classes, hey, you can always look at the REITs. Just do your homework. It's a great way to passively invest. And many of those REITs may have a retail slant, but dig in a little bit and you'll find that they've actually been diversifying quite a bit, and you can get some great exposure across all the asset classes.
And some of those REITs have hit some new lows. I mean, some of them are coming up, but there's definitely good bargains there. So thank you, Stefan. Ramanji, same question to you. I'll add an additional part to your question. First time home buyers, what should they be looking at? And we've got a bunch of people they've asked us questions. What should a first time home buyer do? And obviously your overall thing, but first time home buyer in specific.
So, Vijay, first time home buyer, my first advice is take a good advice. Most of the time I see if you don't take a good advice, you always get into the wrong side of the story. And because, first time buyers, and I have a good experience of working with first time buyers. And the major challenge, what I see, is the lack of information and lack of knowledge. Of course, they look towards a qualified, a well-educated realtor who can actually guide them. Because what happens is, when a first-time buyer lands into this country, his comparable is the house back home, the real estate back home. And it is so different. They love every single thing, whatever they see here. So identifying the right product for them and understanding their need in coming 6 to 12 months or 2 years is very, very important. So for that, first thing first, before buying a good house, buy a good advice. Now, as far as the as far as the investment is concerned, I have a little different opinion than majority of the esteemed panelists. Vijay, investment is all about timing. So a good investor, when the market is good, makes money. When market is bad, good investor makes more money. And when market is in recession, a good investor makes the best money. So as an investor, I always wait for the recession because my dollar can buy a stuff which was selling for $3 when the market was hot. So it doesn't matter what kind of market it is, investor is always bullish.
Fantastic. I think that's great advice. And on that note, we're up to the top of the hour there. So we like to thank everybody, and I'd like to call my colleague Don Patel to give a little bit of an end note and thank everybody. So over to you, Don.
Thank you, Vijay, and good evening to all the panelists, all the viewers on Zoom and Facebook. Thank you very much for taking out the time and be here at our first roundtable, annual real estate roundtable, actually. I believe knowledge is the power, and I'm a lifelong learner, and I'm sure everybody has, with this fantastic panelist, we have got the great insight today. How the whole real estate market, like we have seen the whole thing from Lisa Patel as our Treb president to Reetu Gupta as a hotelier to Stefan Teague as a commercial leasing firm, and Raman, of course, is as a real estate a combo, what everybody has presented over here. So on behalf of ICCC, we thank you all very much for being here and taking your time out on this first roundtable real estate to come up. And I'm pretty sure everybody has an insight where they lie. Big round of applause again to Lisa Patel, Reetu Gupta, Stefan Teague, and Raman. Before we conclude our session, on behalf of ICCC, we'd like to thank the back door, the support staff, which have made these panelists to come and take out the time to be here on this and make out our presentation in a very presentable way. Also, our sincere gratitude to our chamber, where the Tangentia has done our technology partnership, managing the webinar seminar over here. Without our sponsors, these kind of the things are not happening. Again, the viewers is as important. Our ICCC members are also as important as our partners who are supporting us into this kind of events, or of course virtual nowadays with COVID-19. And soon we all hope to get together and do in person, as the graph also showing about everybody's waiting for the vaccination. And hopefully in Canada, I mean, as we are seeing in Ontario, we'll be all out by September to meet in person. We'd also like to thank our gold sponsors, Turkish Airlines, our sector sponsor, SBI Canada, ICICI Bank Canada, Seneca, Rakesh Vijay and Raymond James, GT20, and TELUS Businesses. Those are our sector sponsors. And our media sponsors or media supporters, Weekly Voice and PTC Punjab Canada. And again, thank you. Good evening to everyone. And we really appreciate everybody's time and efforts to put these panels and bring this very knowledgeable and insight of this real estate market, what is happening, as we all said, in South Asian and in Indo-Canada, Indo-Canadian community. Investment and the real estate, it goes heart by heart. They wanted to make sure that their every dollar bring out the best value what they can fetch into that, whether it's a seller or buyer or whichever type of the clients they are, whether it's leasing a building or plazas or any kind of investment, we are always there. And thank you again, ICCC, for bringing out this kind of a great panelist who is bringing a lots of their insight to the community. Thank you guys and have a good evening.
Thank you very much.
Thank you, everybody. Bye.